here's part two of my strategy. Hopefully, part one made a lot of sense to you guys and kind of helped you just get a basis understanding of what I see and what I look for. But here I'm going to go over the actual executions and what I want to see on the 1 minute on the smaller level to actually execute a trade and where I want to set my take profit and stop loss and how I manage my trades. So this is the same setup we saw from the first video. We swept the liquidity, came into the new week opening gap, and ended up respecting this whole order block area. And the second thing, or to actually get an entry, what I want to see is a 1 minute inversion in the direction of the trend after we already get confirmation that we're going to go higher, right? So right here, obviously respected this whole order block level as we're in an uptrend. And we have an IFVG right here, right? So I most likely would not have entered off of just this IFVG right here, right? Because we failed to inverse this one and we're still showing bearish structure on the 1 minute, especially since we inversed this little bullish gap right here, right? And we just had a super strong bearish candle, right? So we're not just going to enter because we get an inversion. We want to actually have a melodical entry, and we actually want to have a high win rate, a high probability setup. So although entering here would have worked out and given you a better risk reward, this is not a high probability trade. And because we inversed this and had a strong candle down and actually got a CISD to the downside that we don't end up holding, but it's just a thought because obviously we see this now that it works out. But if we're looking at this on the chart, if we're looking at it from over here, we don't know if it's going to work out, and this doesn't look that good, to be honest. So what I would have liked to see, this would have been a super A-plus trade, is we wait for the CISD, right? So we get a candle close, we get a bullish close above this bearish candle to show us that we're going to start delivering higher, right? And as well, we pair that up with a nice inversion. So we failed to inverse this gap here. We came up, tapped in this 1 minute, and failed to actually push above this gap. But we paired up with the CISD and this 1 minute inversion right here to keep us pushing higher. And so I would say this works 90% of the time. When you pair a CISD and an inversion together, like this, where we get a strong push up to inverse this gap, get a CISD as well, that's like a 90% win rate model. Doesn't happen as much, but when this happens, I will take it literally 10 out of 10 times, even if it fails. So this looks really, really good. And some people like Ethan.Tradez and other traders will wait for a retest of the inversion. So instead of some people that trade IFVGs enter here right off the inversion and set their stops below, they'll have their take profit up here or wherever, and they'll enter here. But some people will wait for a retest and would end up entering like right here or right here. So I'm kind of 50-50. I don't really, it depends. It's more of like a feel depending on how the market's delivering. So since we inversed this as well, you could have entered here. We inversed all this. So I most likely would have entered either right here off the CISD or right here off the retest and then push back up. So 9 out of 10 times I would have entered right here and I wouldn't have waited for the retest, but I would have entered right here with my stop below the inversion, like the whole gap that caused the inversion. And I see a lot of people that will trade and just target previous liquidity high like that. I don't really do that. I think it's kind of dumb, to be honest, because I call my model a continuation model. A lot of people have a model called that. And so to me, when I see people calling their model a continuation model, but they're taking their take profit at previous liquidity highs. I'm like, how is that a continuation model when you're just trading to a previous high? You want price to continue higher, right? Especially when we have a strong predominant draw on liquidity like this. So, and another thing I do, I don't have set take profits. I never set, like, I'll never do this where I set a limit order like that, and once price gets here, I'm out. I don't do that. I think it's kind of stupid, to be honest with you. Unless you have like a pretty tight stop, like a pretty tight TP where price may come, like if it's in a fair value gap, like price will come into it and immediately retrace down. I can understand that. But for my model, and all my students know this, if I'm getting in here and I want to see us go higher, I'll have my full take profit will be here, yes. But once we get to this previous liquidity, I'll just trail my stop loss closer and closer. So once we sweep this out, I would put my stop loss below the swing right here, because if we break below the swing, we're probably going to go lower. So I would have had my stop right here in profit, and then I would have just kept moving it up and up. After we move higher, I would have had it here, and then after we moved higher, I would have just kept trailing and trailing and trailing until we eventually would have hit full take profit. And so this trade is just like, this model has truly changed my life, and it is such a simple strategy if you just stay patient. Like, the more you trade, the more inversions you trade off of. Like, if you take 4 inversion setups a day, you're an idiot, quite frankly, and you're just not going to have a high win rate or a high risk reward. So this was literally 4.37 risk reward ratio, but we were only in drawdown to where it was a 11 RR. So that's like Powell bottom ticking type risk reward ratio. So really, really good trade here. And if we would have held this full take profit, would have been 2.5K. And that's pretty low. This is a very low volume day, but super, super good trade. And my stop loss is always going to be below the candle that forms the inversion, or that forms the gap that gets inversed rather. So we have this bearish gap. My stop loss will be below that candle that formed it, and my take profit will always be at a strong predominant draw on liquidity. Or sometimes if we have like a sometimes I'll take a long or short into a fair value gap like this. Like if I got long here, my full take profit would have been like halfway into the fair value gap, because no one knows where in the gap we're going to stop, or if we're going to go through it or whatnot. But yeah, that is how I take my trades. That's how I trail my stop loss, where I put my take profit, and how I just execute my trades on the micro level. So if you have any more questions about the strategy, leave a comment. I'm going to make another one about it, and another one kind of about my other strategy, and more in detail with the continuation model. But this is just a trade example and a breakdown of what I'm seeing and how I'm trading it, and what I do and what you guys should do if you want to have a high win rate model like this. So yeah, appreciate you guys watching. Leave a comment if you have any questions, or if you want to join the Discord or the mentorship. I'm running a sale for it right now. So yep, just let me know, boys. Thanks for watching.